All right, hi everybody, welcome back to the channel. And today we're talking about a hypothetical $1 million portfolio. We're going to have some fun today and go over this spreadsheet that I created. What this basically is going to be the wheel strategy with a large amount of money. Now, the wheel strategy, for those of you guys who are new, is going to be this covered call cash secured put strategy that's in a repeating cycle. So if you're not familiar with cash secured puts and covered calls, I'm going to get into that in this video, but I would recommend probably checking out some additional resources. I have my website, dailyinvestmentadvice.com. You guys can check out in the description. Also, if you're new to Seeking Alpha, if you've never heard of it, it's a great website for research and analysis on the stock market. I love Seeking Alpha. I've been using them for quite some time, but this is a website where you can come sign up for the pro version and you get access to tons of tools and resources. As a full disclosure, I am an affiliate, but I do love their service and I think they have a great product. So check it out in the description if you guys are interested. With that being said, let's get into the video. We have over $1 million portfolio here, and what we have also are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different stocks. Some of these you're probably very familiar with, like AT&T. Others you might not be so familiar with, like Stag Industrial. We also have Procter & Gamble, Coca-Cola, Realty Income. A lot of these are going to be some of your dividend aristocrats, dividend stocks that have paid for a long time. And so what we're looking at here is basically with this portfolio, since we have different weights, you'll notice that we have 1,000 shares per position. We also have the portfolio value. And you'll notice that some of these portfolio values are like 17,000 versus 157,000 and vice versa. So don't let that trip you up too much. It's just for simplicity's sake. Hypothetically, if you had a real portfolio worth over $1 million and you're doing the wheel strategy, you might want to be a little bit more diversified in terms of how you're getting that cash flow. But for the sake of simplicity, I pretty much just kept all the weights the same at 1,000 shares. But the actual dollar values are going to be different, and just depending on what share price they actually trade at. So strike price right here, you'll see this is going to be what's called your cash secured put. And so what a cash secured put is, on these trades, you'll see where the expiration day is, the strike price, and then you'll see also the put. So this is going to be the entry trade for entering these 10 positions. And we're actually going to be buying the stock through what's called a cash secured put trade. And to give you an example of what that looks like, we can simply say I'm going to buy AT&T 1,000 shares at the agreed upon price of $17 per share. That's the strike price, is the agreed upon price. And I'm going to agree to do so by March 1st, 2024. Okay, so that's the cutoff or the expiration day. And once that expiration day comes, essentially the option expires worthless. And no matter what happens, you get what's called a premium for being willing to buy the stock at $17. And so that's the risk you take, that AT&T would go basically underneath that strike price. And so let's say AT&T, some bad news comes out, the stock goes down to $16 or $15 per share. Perhaps the company even announces bankruptcy in a worst case scenario. You're still on the hook for buying those 1,000 shares at $17 per share. And to compensate for that, you're going to be getting what's called that premium. And the premium is actually over here where you'll see the total premiums. And this $90 right here is not a huge amount. But for AT&T, it's only a $17,000 position. So it's a very low part of our portfolio. Take a look at another stock like Johnson & Johnson, where we have $158,000 tied up, 1,000 shares. We're going to agree to buy Johnson & Johnson at $150 per share by this expiration day of March 1st, 2024. And by doing that, we're going to collect a premium, in this case, of $543.50. And you'll see down here we have a premium of $1,400, just over that, for McDonald's Corporation, which is almost $300,000. And so that's going to definitely tie up almost 30% of our portfolio, which is just over $1 million. And so we're going to be compensated for that by taking the risk that McDonald's falls below $280 per share. It's currently trading at $292, as you'll see right here. This is based upon the Friday prices, and today's Sunday, so it's the most recent price of the stock. But you'll see here that we're going to be entering this trade with a strike price of $280, and the expiration day is going to be March 1st, 2024. And so what that means is we're on the hook to buy McDonald's by the expiration day of March 1st, 2024. And so if McDonald's, let's say, falls down to $250 per share, falls down under $150, some really bad news comes out from McDonald's. Let's say they declare bankruptcy. Probably not going to happen, right? But theoretically, anything's possible. And so you're being compensated for that risk. And by doing so, you're going to collect over $1,400 for being willing to buy those 1,000 shares. So that's the beginning of this strategy with the cash secured puts. And so it can continue, and you can actually turn around. Let's say some of these stocks you end up getting long. Like for example, let's say AT&T stock is under $17 per share. It's trading at $16.50. So you own now 1,000 shares of AT&T. Here's the thing though, you can actually turn around and now sell what's called a covered call on that same position. And so we can do the exact same strategy just in reverse. We're still collecting a premium. We're still going to be utilizing this strike price of $17 per share, let's say, and we're going to be collecting a premium. Probably not the exact same as $90 per, for the last premium we received, but in this case, it might be a little bit more, a little bit less, depending on where the stock's trading, depending on implied volatility and different factors. But essentially, once we end up getting long the stock, what we do is we turn around and sell a covered call. Now, the other cool part about this is let's say we end up getting long AT&T stock because the stock is below $17 upon the expiration day, so we now own 1,000 shares. Well, we can calculate how much in dividends we might receive just from one dividend payment. Now, AT&T pays on a quarterly basis, so you'd have to look at when they pay out their dividends. But assuming that we could sell a covered call that's past the day they pay the dividends and hope that we don't, get called away on those shares, what happens is we get that dividend in addition to not only the cash secured put premium that we already received for being willing to buy the stock at $17, but now that we own the stock, right, we own 1,000 shares of AT&T because it finished below that strike price, now we can collect the next dividend that comes into the account, which is going to be 28 cents on a quarterly basis, and the total amount of dividends we're going to receive for that payment is $280 per share. Or no, I'm sorry, $280 total on those 1,000 shares. So, whoops, spilled some water. With that being said, so we're going to look at this from the perspective of all these different dividends you can collect in addition to, the premiums you can collect from just being willing to buy the stock. And I did the math on, if you could assume just hypothetically one dividend payment from these positions, right, over the course of, let's say, an entire year, right? Even if you're not getting long these stocks every time you put in these trades for these cash secured put trades, because let's say, for example, Johnson & Johnson stays above that strike price, right? If we go back here to Johnson & Johnson, let's say the stock finishes at 155. Well, the strike price is 150, so we're not getting long those 1,000 shares. But we can do another cash secured put trade after that, and perhaps we can generate a similar amount of money, right? But if we assume we're even going to collect one dividend from these stocks, all 10 of them combined, we can take a look at that, and now we're looking at $6,000 plus from those dividends, those one-time dividend payments, in addition to those premiums, and that's not including the covered call premiums that we would get once we actually get long the stock. Then we can turn around and do it in reverse, like I was just explaining with the cash secured put strategy. So it's basically a revolving door of income, and this is just the initial setup. And so you can imagine over the course of several months, if we're already generating this type of money, even just off the premiums alone for the cash secured puts is $5,793 as one-time payments that we could theoretically collect today by entering these trades. And so if we're doing that and we're getting over $5,000, you can kind of think about this from, okay, well, what other income could I get? Well, one way you could get additional income is through those dividends, assuming a one-time dividend payment from all those 10 stocks, over $6,000. And these are companies that have paid dividends for quite some time, pretty steady, pretty standard dividends. A lot of these companies raise their dividends over time, so you could even get more passive income than what we see right here. But you'll see some of these pay on a monthly basis. Most of them pay on a quarterly basis. And so there's basically three different methods of getting income with this strategy. One, like I said, is the dividends. The other is the cash secured puts. And I don't want to sound like a broken record, but the other one is the covered call strategy, which is not specifically on this chart because this just shows the initial setup of how this could work. But nonetheless, it is a very lucrative strategy if you're looking at this, whether you have a $100,000 portfolio, a $250,000 portfolio, or a $500,000 plus portfolio, whatever it is. I always enjoy kind of going over this and just looking at things from that perspective. I think it's always good to, get a feel for what kind of income you could generate. And this is just an example of what you could generate yourself. You could copy this exactly or change up the stocks if you want, but this is kind of, it's good to have these numbers in your spreadsheet because you can plug any kind of number. If I was to plug this in for a $250,000 portfolio instead of a $1 million portfolio, the only thing that really changes are these numbers over here. The total dividends, the total premiums. You could add an additional tab for the total covered call premiums. Assuming we were to get long some stocks, run a simulation based upon volatility and where we expect those stocks to end up. Look at that third source of income. add a third tab for covered call premiums. Because once again, once we get long the stock, all we're doing is turning around and generating additional income through both the dividends when we own the stock and also through those covered call premiums. And you can kind of factor in the additional income you would receive from doing that. And so it's pretty cool to think about, guys. And it doesn't matter how much money you have. I like working with larger numbers because I like to dream, right? I like to think about the possibilities and what could happen. You know, if you actually could make over $11,000 within a relatively short period of time with over $1 million portfolio, it's definitely possible because you have so much capital you're working with at that point. And so that's what's so cool to think about. You know, when you get up to those larger numbers, you got a $500,000 plus portfolio, you know, you got a lot of income now you can generate from that, cash flow. And really, I mean, that's the dream, right? It's being able to generate consistent dividends, cash flow. That's what we talk about on this channel. So if you guys like that content or that type of content, be sure to subscribe to the channel. Your subscription is really appreciated, as well as when you guys hit the like button and, you know, just showing support for this type of content in this channel if you guys want to see more stuff like this. Because what we talk about on this channel, guys, is basically passive income and how to generate, all kinds of different ways of generating, side hustle income. By the way, I forgot to mention, real quick before we sign off here, if you guys want to get access to dataannotation.tech, I highly recommend checking them out. They are a great website for fully remote work. You know, one thing we talk about on here is not just passive income in the stock market, but also like ways you can generate passive income within, online side hustles and stuff like that. We've talked about this website on the channel before, so I wanted to mention it. For those of you guys who, stayed this long, maybe you haven't learned about this website yet, but you're about to learn about a website real quick that allows you to work from the comfort of your home. Right here, you'll see work from the comfort of your home, dataannotation.tech. It's a great website. I highly recommend it. And if I could log into my dashboard, I would show you. It's having trouble loading right now. But basically, you can get access to $20 plus an hour work on a consistent basis. Right now, I have several projects paying $27, $22 an hour. You'll see one of the projects I have pays $27, and it's a consistent project that I could theoretically work over 40 hours a week on if I want to. And so it's definitely cool. You'll see some projects I worked on previously for $25 an hour. And so I highly recommend at least checking out this side hustle if you're looking for something in terms of a remote work. It's a great way to get started, great way to add an additional income stream, especially with the uncertain job market and whatnot. So with that being said, guys, hope everyone has a great rest of your weekend. Take care. We will see you guys in the next video. God bless, and thanks so much for tuning in. Take care.